Sanjiv Bhasin is also joining us on the show. Mr. Bhasin, I wanted to take a leaf out of what the minister said at the Global Business Summit, and especially the power minister, who's, in his own words, power sector is the biggest game in town. That's the space where all the action is, and he is very categorical that he expects the pace of reforms to continue or accelerate, and hence the rewards in the stock markets will continue. He said power sector is the space that will reward you the most. Do you concur with the view?
Yeah, good morning, Anisha. And firstly, take it from the PM. He said in his third term, we will be the third largest economy in the world, which means the market cap will double in the next 5 years. So purely the direction is clear. It is just that, we want them to come back. I think the power minister has been exceptionally, his work has played out exceptionally well. Particularly, the recovery from state electricity boards, the strengthening of the mechanism of payments, all this happened after COVID. REC, PFC have had the best asset quality and best what we call NIMs in the industry. I still think there is room on the upside, but you have to take it with a pinch of salt that most of these stocks have already outperformed in a big way. However, like we said, we are in a power surplus situation, which means recoveries are the key over here and distribution transmission losses must be at the least. So I would still go with the Tata Power and an NTPC, and on declines at REC PFC. As a disclosure, these four stocks are in our portfolio also.
Sure. Let's also get in your thoughts then on Hero MotoCorp. How are you reading into the kind of quarterly numbers that the company delivered? I know one of your favorites within this entire auto space is an Ashok Leyland, but what else are you tracking?
Yeah, good morning. So, Avan, we gave this call to you that it will be 5,000. If you remember, there was a downgrade closer to 4,200. And I stuck my neck out that Hero's numbers will be the best ever in the last 18 quarters. And proof of the pudding lies in the eating. Every third motorcycle which is being charged is a Hero. Secondly, their new launches have done extremely well. And with rural incomes picking up, the stock has done extremely well. However, at 5,000, there is not that much room on the upside. So, look for declines, but it continues to be one of the outperformers along with Bajaj. And that is because purely that the last 2 years underperformance because of not pick up in rural incomes. This was a laggard. But I think the numbers have been stellar. We are all awaiting the launch of the Harley. Even I have booked one and I'm waiting for my turn to come. I think that will be the next game changer, maybe over the next 4 quarters.
Game-changing visuals also, Sanjeev. We are waiting to get that clip of you on a bike.
Yeah, good morning, Aisha. I am waiting my turn. How fast it comes, let's hope. I will speak to the management. Maybe they can speed it up. But that's been my childhood college dreams to ride a Harley.
Yeah, absolutely. Aspirational dream, isn't it? A lot of other numbers as well, which are going to be in focus. Look at what Bajaj Hindustan, for instance, has done. It's reported an EBIT profit for all of its segments. Even though prima facie, it seemed like the numbers didn't quite match up with the street estimates. But the company has actually turned profitable versus loss last year. But Sanjeev, in the interim, we've seen a very ranged move from the entire sugar pack as opposed to what, most of them clocked, say, about a year and a half back. You think the meat of the rally in sugar is behind us?
So take the case of Bajaj Hindustan. It was 6.5, 7 rupees a year and a half back. That is when we really said that a BIFR case cannot be the type, which will not revive. Now, Aisha, it's up 7 times in that space. So don't, expect stock market returns to come. But the back-ended results have been very positive. I think the crushing season behind, you've seen a hike in SAP prices. All good news maybe in the price in sugar. And I think that now commodities may be, particularly soft commodities, may be headed lower, given the type of news flow from the government on non-exports and so on. So status quo on sugar, Balrampur Chini continues to be our favorite pick over there. As a disclosure, Bajaj Hindustan was in our portfolio about 1.5, but I think tripling 4 times made us also greedy and stayed the course, but be with the large caps. EID Parry, DCM Shriram and Balrampur Chini. These are 3 stocks if you want to buy, you should be in it. But we think there are better sectors which can outperform sugar in the near to medium term.
Your thoughts on ONGC after the rally, which has already played out in the stock?
Well, we continue to be overweight. It's in our portfolio. We think this is the best energy stock to own in India, and it is very, very reasonably priced. This sheer weight of ownership is at the lowest we've seen, and pessimism at its highest, just like in HPBP. So I don't rule out targets of 325, 350 coming, and that may come faster than we thought. This is going to be one energy stock you want to buy on any decline and add in your portfolio. As a disclosure, this is in our portfolio.
Okay, point taken. So that's about the oil marketing companies. But Honasa Consumer also came out with its numbers, and it was a very strong show, at least on the revenue front. There was a sizable jump. And overall, Mr. Bhasin, whether you take the case of PB Fintech or a Zomato, even Nykaa wasn't very ugly, and now Honasa as well. Do you think that time is coming again for all of these new age tech companies per se?
Well, yes, and if you left aside the Paytm fiasco, they all are reporting very, very strong numbers. In fact, Paytm will also come out with strong numbers, but it's surrounded by controversy. So yes, as a disclosure, PB Fintech and Zomato are two of our topics. We also own Paytm, unfortunately, and we are suffering. But I think PB Fintech would be my top pick, given that the management guidance talks of extremely positive growth and they've surpassed all expectations. I think this is one stock which you must add here and on decline. This could be the biggest fintech gainer in 2024.
Okay, that's the take coming in on PB Fintech and, of course, the entire fintech universe. In the meantime, the other star performer of late has got to be LIC. Let's just bring up the last 15-day and 1-week chart on LIC. In fact, JP Morgan has now upgraded the stock from its earlier neutral stance to now overweight. They've upped the price target as well to a 1340. The stock is already closed in on that 1,000 plus figure. They're saying that they've posted strong NBV growth in the third quarter, and that's what's instilled this upgrade coming in. Sanjiv, your thoughts on LIC? Finally, it's begun its move.
Well, it should have done that much before, Aisha. If PSUs as a pack market cap has gone up 5 times, Adani market cap has gone up 3 times, LIC was a no-brainer. Given that, now their APE has grown aside from the private insurers. And also, they are now very, very careful about how diligence goes, how transparency comes, because it's a listed stock. I would expect more upside after some consolidation. And definitely, like I said before also, insurance is a must-have in your portfolio. So you must combine some of the private insurers with the PSUs. And I think LIC, New India, SBI Life, HDFC Life, if you did a basket and kept your time horizon slightly longer, then, like you said, even at 22,000, these are very, very good plays with a longer term view.
So let's also welcome Sanjiv Bhasin in the discussion on markets. Sanjiv, morning. Sanjiv, it's a bit of a shakeout which is on, which you were kind of mentioning some time now. But what one really sees in the market is that the entire market is not a broad-based sell-off backed by volumes and big sell figures. In fact, FID were small buyers. But the point is that the frothy areas of the market may be undergoing a correction. Do you see some more shakeout before buying comes in, or you will already start becoming a buyer?
Yeah, good morning, Ajay. So that's a natural course. You see, the mid cap, small cap had run way ahead of valuations, and that will always be the bull market is in the mid and small caps. Don't make any mistake about that. And it is also telling you that we are in a global bull market. I mean, the Nikkei is up 1,000 points today. When in last you saw at 36 year highs, the Nasdaq, the S&P is above 5,000. Yes, there will be this wall of money which will say that markets will come down. But yesterday, in a macro level, your inflation numbers are weak, are lower, and growth is relatively high. I still think the large caps and certain stocks in the mid caps will again look attractive. You've seen a lot of profit booking in the PSUs, but that's where the real wealth has been created. So this is part and parcel of the market. I would expect the index to start to outperform and banks to join in. That has been a weak spot. Now, if inflation is lower, credit is expanding, I think, like I said, private banks are in a very sweet spot.
Excellent. So how are your trading ideas looking like right now?
Yeah, so Ajay, I've been relatively very bullish on IOC and NALCO as two picks. We've added ONGC also there. You see the numbers from NALCO because of their 8,000 crore capex now will start to reflect extremely bullish results. Three things: bauxite, aluminium, and the underlying iron ore. All three are going to be playing to the perfect side from here. You've seen the numbers of Coal India. NALCO can be a huge outperformer. I see this stock even doubling from here in the next 1 year. That is the ground reality on NALCO. You can't have it at 14,000 crore market cap and the type of performance which it has on dividend yields and so on. So NALCO is a good pick over here. Keep your stop loss at say 135. It could again scale back to 165 and beyond, depending on your horizon. Second would be, I think over here, like I said, I am very bullish on the private banks, even though they've underperformed. I like HDFC and I like Kotak. And I think all the bonhomie on underperformance is more or less in the price. You've seen the exit of large players who had to. Thirdly, I would be very, very bullish on the oil marketing companies and use this decline to buy. Like I said, you have to be selective in your stock picks. India Bull Real Estate is one stock which we recommended at 100. It's gone to 125. We are not aware of what the the court verdict was, but I'm very bullish on that stock over a period of time. Fourthly, I will give you one dark horse, Religare. Now, the Burmans have acquired 25% stake. Their open offer is for 26%. You can imagine what it will be when this insurance, broking, investment bank goes in the hands of the Burmans, and every large group wants to acquire a financial firm. I see Religare scaling over 350 in the next 1 year. You cannot have it at 1.5 times price to book, given the advent of fresh capital and a fresh look management.
Okay, fair enough, Sanjeev. Wow, you've really taken care of a whole lot of stocks now. I'm not as spoiled for choice to ask you, but I will get in your opinion then on Paytm. Macquarie has gone ahead and slashed the target price by over 50%, talking about a lot of concerns and the road ahead as well being quite choppy to say, or bumpy.
And now they're downgrading Paytm to 275. So what goes in making a good brokering amount and creating fear when it's most needed? That's the attitude I have. Now, I am not making two bones. I have invested and we are seeing a pain in that. But like I said, PB, FinTech, Zomato make up for that. For me to comment on Paytm would be slightly difficult till we get more color. And you are aware of the noise. Now, the stock is seeing that, and Z is seeing very, very strong hands buying. That's all I can comment. On Macquarie, like I said, we will wait for HDFC Bank also to hit 2200, and then we'll take both these stocks recommendation with a pinch of salt.
Okay, fair enough. Meantime, Naresh, let's get in your take on the charts of some of these PSUs that came under a bit of pressure in yesterday's trading day. How are you reading on a Coal India or even a BPCL for that matter?
So, the Coal India and BPCL are relatively stocks which have gone in a slow and steady uptick. Coal India has seen a large up move, so it's gone up from 240 where it broke out to almost 460. Now the support for the stock comes around that 400, 410 mark. So my expectation is the stock may go sideways going forward, wherein 460 becomes a resistance and on the downside 400 becomes a support. So it should get range bound is the view rather than expecting a larger correction here. Same with BPCL. If you look at it, the stock did a strong rally over the last few months, going up from 400 odd levels to 630. Out here, the supports out here are much more deeper, so some more correction would be normal, but I would expect a sideways, say, as of now, 560 is the first support and 620 remains a resistance. So expecting this also to go sideways for the next few weeks.
Sanjeev, the surprising name in the MSCI inclusion list appears to be an old favorite of yours, GMR. In fact, we bumped into the management from the sidelines of ET Now GBS the other day. And not only the airport business, but I gather even the power business, which is in another company, GMR Power. There's a lot of activity happening. But what about GMR Airports? Do you still like the stock?
Ajay ji, bhao bhagwan che. Gujarati mein kahavat hai. When I used to travel from Bandra to Nariman Point, the Gujaratis would say bhao bhagwan che. 35 rupees mein bhao bhagwan tha. Lekin aapse liya nahi jata tha. You were always pessimistic about the debt. Look at the airports today. You should be proud of your nation building and the growth. In Heathrow Airport, it takes you 3.5 hours to stand. In GMR Delhi Airport, it takes you 5 minutes. The beauty lies in the eye of the beholder. AeroCity is seeing rocking business. As a disclosure, this has been in our portfolio from 35. We don't intend to sell it. And now, so please see where your recommendations are, where your money is. Stocks are jumping 40, 50%. And if you are in the right place and watching the right channel, then you're making money.
Indeed, Parag was a good call, another good call, and the numbers also backed the movement. I also want to talk to you about Bosch. Results are today. About a month and a half back, Bosch broke out of its 8-year high range and got into new territory. Surely some correction is happening, but if you could show the longer term chart, it's crossed the 25,000 mark now. We spoke about 22,000 odd last time. Want to review your call on Bosch, Sanjiv?
Again, Ajay, one of my old favorites at 12.5, 13, 15, 17, 18, and I gave a 25,000 target. A lot of the people who troll me on Twitter are laughing their way to the bank. This is a pedigree stock. Look at the way autos have reacted, whether it's Bajaj, whether it's Hero. Look at the numbers. OEMs are in the best spot. They invested almost $3 billion in Dresden for their semiconductor market, and it continues to be gaining larger market share in India as their very, very big destination. Now at 12.5 for a stock like this to double at 25,000, I can't stick my neck out. But if you have it, just stay put, because good stocks don't come by design, they come by default.
Okay, that is some interesting take coming in. But in the meantime, wanted to get in your take as well on how you're looking at some of these cement stocks. Is there any interest, in the scenario? We're talking about infrastructure activity picking up. This is an a direct beneficiary of that space as a whole. What do you like within cement, Sanjiv?
Correct, and Avan, cement is going through the roof. Look at the price. There's a cartel. 53% of market share is with 5 players. Ultratech is laughing his way to the bank with 138 billion tons, and so is Ambuja and ACC, who have been re-rated. And now you're seeing the highest amount of construction activity as the cold ebbs, because in North there was an embargo because of GRAP and other things. I think they are in the sweetest spot ever. Cement is our overweight sector. Is Ultratech, ACC, Ambuja, and on decline, Fleet Ash, Dalmia Cement. But these three are top picks, and we think that they are only going to be further re-rated on the upside.
From the real estate space that's looking good on the charts that you would buy at the current price? Sony, that's for you.
Okay, I think Godrej Properties would be the first pick from the real estate space. You can see it's a good correction that has happened over the current few days. It has still held on to very good support of 2200. So I think on closing basis, as long as 2200 is getting defended, you.
That's the Godrej Properties. ITC, finally, a lot of noise coming around ITC and what exactly will happen. And now we gather that the bankers have been, have started their work, and there would be a 3.5 to 4% kind of a stake sale from BAT, because they want to handle their own debt issues. They've spoken about it in their own earnings conference call several times, and the street has started penciling that in. Look at the last 1 month, from 450 odd, the stock of IT has slipped around to 400 now. Is it getting to a good value zone, Sanjiv? Once this 3.5-4% is done with, then there wouldn't be any other supply for a very long time, one can assume it. Would you get into a name like ITC around this level when supply overhang is taking the stock lower?
Yeah, so Ajay, there are two things which stand out in this BAT first time coming to sell its stake. A, if BAT could sell whole hog, it would be a very big positive, because then the demerger of the cigarette business would be more in line with the BAT being one of the largest players. I think it's a relative positive, but also Ajay, if you see that SoftBank sells Paytm at or some of their old holding, lot of the foreign private equity players or long-term holders are encashing what they want in India. In a bull market, long-term holders will definitely look at opportunities where they can, reuse that cash for their own personal needs or reducing debt or whatever their other obligations, which in the short run may be negative because of the supply. But in the long run, it tells you that if you expect BAT to come back and buy ITC, he will never get it at a discount. So I think all this decline will see a little bit of oversupply. But if you want to get into a quality stock like ITC, then you can't have asked for a better time.
Out of all these names, Petronet LNG looks interesting. And then maybe one could look at a Gujarat State Petronet also, because GSPL also has a similar structure. The stock had topped out around 380 odd levels previously in 2021. That coming down to 330, 340 would be a good entry point.
Sanjiv, wanted to get in your thoughts then as well as to how you're looking at the entire consumption space. Do you believe that there are interesting opportunities at the current juncture, despite having acknowledged the fact that maybe there has been a bit of a slowdown rural?
Well, yes, Avan, and that is evident in the earnings, and you've seen the guidance being slightly lowered, but are very optimistic on the coming back. You cannot have two-wheelers go the way they have and not the other, the staple or discretionary events also pick up. I continue to think Britannia and Nestle have perfectly fit that bill. Look, Avan, people are missing that the market is revolving around sectors. Who thought that IT and pharma will be at all-time highs? When a time when most were struggling about AI and the slowdown in the US, markets are very uncanny. They like to pick up sectors which are most crowded and stay away, and which are most avoided. They want to do the best. I still think Britannia and Nestle now look to be the perfect fit, and they would be giving you longer term views, given that both the numbers were reasonably in line, and the type of brand they possess. I think they can be relatively outperformed in this consumption space nearby. On the other hand, your discretionary spend is seeing Maruti take the cake. I think Ashok Leyland is again my top favorite. Ashok Leyland and Wipro perfectly fit the bill in auto and IT and use any decline to buy.
Sanjiv, what really held out yesterday amidst the mid and small cap decline was the PSU profit taking, right? Although we were just debating earlier, Ajay and I in the show, that, valuation wise, they are still expensive. And from the yearly peak, it's not much of a correction which has taken place, barring a few odd names here and there. You've always cautioned about, the frenzy that's building up in some of the railway stocks, and selectively one should profit take. What other than railways would you recommend profit taking within the PSU pack right now?
So, Aisha, look, markets, having spent 35 years, I realized that every 10 years or 5 years, when the new bull market comes, there are new leaders. This year, the leaders, the last 1.5 years, has clearly been defense, railways, PSUs, and they take the cake. They're just starting their rally. And valuations, even though have been cheap, have still not been exceptionally high. But in railways, definitely a lot of the good news is in the price. We know the capex, we know what type of attitude the government has towards increasing that. And I would be a little cautious there. But like I said, on the contrary, I think some of the metal plays, and have again indicated that the credit deposit ratio spread is just a matter of time.
Interesting. You spoke about pharma briefly. Did you have you analyzed Biocon recently? There has been some buzz around how they could actually monetize either the biologics arm or Syngene, and may use it for debt reduction, just the way Glenmark did. Glenmark went from 300 to 900 on their debt reduction spree. Could Biocon do that, or you think that it could be a bit challenging?
Well, unfortunately, Mrs. Shaw has always, promised but under delivered. Now, Biocon at 250 was a real good bargain, and we've all waited for that debt reduction, which will improve the return on equity. But Ajay, it is yet to take off. So we still think that Biocon should be in your portfolio, but more weightage to Dr. Reddy's, Cipla, and Lupin. Lupin has been a doubler from my 750 to 1600. I can tell you Lupin is headed back to that 2200 over this year. So the Lupin would be my top favorite there. Biocon is in our portfolio, but like I said, the real proof of the eating remains on the performance of the stock. It has to clear that 300 level. Only then we'll talk of wealth creation.
Sanjiv, have to ask you about Indiabulls Housing. The rights issue closes today. It's a sizable one, right? 3,600 crore rupees. What do you think investors should be doing here?
Well, you should have booked out at 200 and subscribed to the rights. You got the opportunity. Aisha, there are corporates which are doing extremely well. India Bull Housing, which we had invested, we divested, but India Bull Real Estate, you cannot have a market cap of 6,500 on some of the primest of locations. We know of the issue of the previous management that is over. Embassy has taken over. Now there are clearances which will come ahead. And I think once the embassy open offer or whatever way there will be enough reinfusion of capital, and coming to a professional group like embassy, I would be very, very positive on India Bull Real Estate. That is where you should be converting and putting your money. India Bull Finance, like I said, we will know more about who the actual largest shareholder is. As you know, there was no large shareholder even worth 1.5%. That is what is going to be the unbundling. Similarly, I gave you a call on Dhanlakshmi Bank, which I said can be a very good acquisition target, given it has a market cap of just 1,000 crore and no holder of more than 1.5-2%.
That's my view, Sanjeev. We may agree to disagree, but that's my view that when a brand takes this kind of an hit, both from a governance standard, from an institutional standard, and from a talent standard, there are long-term challenges which come up.
I fully agree with you, Nikunj. Like I said, it is best to wait and watch as the drama unfolds, buy it higher, but let more clarity come. You've seen 3 episodes like that, and where the over ownership by FIs always drives like a herd mentality. You saw the first case is HDFC Bank. It's still not recovered, despite being the largest mortgage lender and real estate in the best place ever. All you're questioning is now HDFC Bank's efficacy to increase margins and credit deposit. For God's sake, when a bank is trading at 2x price to book 1 year forward once in 20 years, this is the time you can't get opportunity again. But like I said, the dumb money has been only chasing HDFC Bank as a prima donna for the last 3 years. And that is what has upset the apple cart, because suddenly NALCO, SAIL, REC, PFC are up 3 times. So allocation of funds, dependence on one stock can be someone's curse and someone's opportunity. We are thinking that 2x price to book. HDFC is priced in all negatives. If the mortgage book is growing the way it is, then you should not look at any other mortgage lender rather than HDFC or the bank as a whole.
Again with HDFC, why is it suffering? Because they've changed the guidance. Secretly, 4-year doubling now suddenly becomes a 5 to 6 year doubling. And that means that instead of 17-18% growth, they will be growing at about 12 to 13%. Now that's a 5% change on that kind of a large base, which means the promise that after the merger they will double in 4 years could actually happen in 5 or 6 years now. And that's what markets are telling you. That why should we give you this kind of a premium and this kind of a comfort, where HDFC in a sense had a reputation of under committing and over delivering. That was Aditya Puri for you, but Shashi Jagdishan has not lived up to that. And that I think is the most puzzling point, that why did the management did not foresee that this kind of a growth is going to be slowing down. I mean, if the economy would have slowed down, I would have argued that okay, it is a macro problem, but there is no macro problem. I mean, it's your assumptions and it's your calculations about HDFC which you thought is likely to grow, and it is actually not growing. But I'm going to just move away from these 2 stocks which in a sense have been painful stocks to something where wealth has got created. And a lot of wealth, Bhasin Saab, has got created in railway stocks. All you have to do is like close your eyes and throw a dart and railways, and ticket nahi mili, waiting list mein train hai, does not matter, but as long as you put a railway stock, you've hit out of the park. Would you buy railway stocks in this decline?
Well, we booked out of some of them, particularly IRFC, RVNL, but we will look at opportunities. However, like I said, if NALCO numbers are good, why should I keep chasing stocks or sectors just because they've corrected? I am very positive on NALCO, ONGC, and you can add an NTPC there. So I think we will build our book over there. We think that PSUs have just seen a glimpse of re-rating, and yet the real picture is, picture abhi baki hai. So do your homework, do your legwork, and get into the stocks which you like. Some of the quasi plays like REC, PFC still give room of comfort because their earnings have been stupendous and growth patterns on power have been strong. So if you do your diligence, you will get real picks. But for us, NALCO, ONGC, and NTPC are our 3 top picks. We think NALCO can be a doubler from here, if not very, very fast.
Read into the outlook on Eicher Motors. It's been a record performance that they have delivered in the quarter gone by. The volume growth as well has been steady, Sanjeev?
Well, Avan, you can see Heroes touched 5,000. Bajaj is almost on the cusp of 8,000. And Eicher, which was touted at 4,000 to be come out with brilliant results, has suffered more to do with the launch of the Harley and the Triumph by both those competitors. That has hurt Eicher rather than the earnings. I think the earnings were in line or better. But like I said, these are weightage of stocks which you will give. Rural income still continue to be very, very strong. And I think that Hero and Bajaj, which have been two of our picks, will continue to outperform. On iShare, we have a neutral rating, given that we will see how the competition bites in and how they are able to respond. I think Siddharth Lal has been an exceptional leader, but right now he has competition up his sleeve. So we will give that a miss. We think Bajaj and Hero in our portfolio are the best. The NCLT and the quotes. So I'll keep my observations till there.
You nudged me on Paytm, and while they continue to face that serious risk of customer exodus after the RBI curbing on its payments bank, Sanjiv, yesterday you had Macquarie cutting the price target all the way to 275. Considering that you have a holding here, have you exited Paytm completely?
No, Aisha, we remain firm. We think that there will be more color. Obviously, Macquarie is giving a technical call, which is, increase the fear, similar to what he had said, 2,200 on HDFC Bank. So either of them will come correct. And congratulations to him on the fear call and the greed call. But we continue to remain positive that there will be a resolution. Now, we know the lacuna, but that is more to do with how RBI and the fintech in charge try and rectify that. Yesterday, if you heard Axis Bank, they said we will be very, very thankful to RBI if they allow us to align with Paytm. So let me tell you, there are a lot of people who are just waiting to grab the asset or get into a license, because this is the father of fintech has been Paytm, and I think there will be a resolution. We cannot comment more. It is painful, like I said, but we have to sit through. Good opportunities and bad times don't come together.